All the action in the studio. Look, the sun is shining bright early in the morning.
It is. Well, just adding to some of the brightness of the viewers who are watching us, right?
No, I mean that's the way it is.
The block deals.
The block deals. No, it's not bad. You had an all-time high on the Sensex yesterday.
Yeah.
Nifty almost like 8-9 points. So purely in terms of the directional move, the ring which we've been waiting for, that's happened now. Now, where do we go from here? Well, the fact that we touched a new all-time high on the Sensex is yesterday's story. It's not going to be tomorrow's trend. What are the contours? The contours are that, yes, foreign institutional investors, they've sold, but they've come back also. The desire to participate in mid and small cap stocks, I think, is evident. Let's look at that data. The optimism in the broader market, I think, is unparalleled. The participation in block deals, I think, in the broader market and in individual stocks, I think is exciting. And look at the markets in this quarter. Nifty is up 9%, mid cap index is up 19%, and the small cap index is up 20%. Hello.
Yeah,
20%.
I mean, even yesterday we were only 31 points away.
Yeah, so that all-time high is formality. What happens after that, I don't think we are done with the rally.
Yeah.
I again say it again, what I learned in my school, the law of Newton.
Yeah.
If a market is in momentum, it will remain in momentum till the time the contours do not change, which is either the macro has to change, something geopolitical has to change, which markets are not aware of. Second, the liquidity flow has to turn meaningfully, not like 1 day of selling or 2 days of selling. It has to turn meaningfully. And third, the valuations have to become obese, which they are not. So the pillars on which markets are going higher, I think that is intact. For me, that is very important here. But I want to go back to that block deal, and why am I insisting on that? Look at the block deals here. March 36,000, April 7,000, June 40,000 plus. And we are what, another 7-8 days are still left for the month of June. So the number could well be closer to 50,000. 50,000 crore of block deal. And the market has able to digest it. Yeah. That's the point I'm trying to bring out. And this week also we've seen 5,000 crore of block deal already in the first 3 trading sessions, and the Nifty is standing tall. So the market are digesting. So far the supply is coming. I don't think we are there yet where the supply is humongous and the demand is not there. So that's another point which we've been discussing. So the market, I think, is looking solid. Stay on the course. Very simple. Kuch mat karo. Stay on the course.
Yeah. Shavasana.
Savasana. Very simple.
Okay, so that's the easiest recommendation that we can give you at this point of time. Stay the course and get into that Shavasana mode and have that patience. But yes, what about the cues coming in overnight as well? It doesn't look very great given the fact that SGX Nifty is suggesting to a muted start, and that's because the US markets stumbled. It's the third straight session actually that the US markets have been declining quite a bit. Of course, yesterday what really spoiled the party is that comment coming in from the US Fed Chair Jerome Powell, wherein he said that all of his participants of the Fed meeting believe that there is more likelihood of rate hikes going forward. There seems to be a consensus there that there should be 2 more rate hikes for around 25 basis points as well, and that is what hawkish comments really set the set the slide in the US markets at this point of time, and that's the reason the Nasdaq was down 1.2%. Dow Jones also saw a cut of 100 points, and today as well the Asian markets have opened mixed, and as a result of all of that, the SGX Nifty is suggesting that we are going to start on the back foot as well. Nikunj, what do you make of these commentary coming in from the US Fed Chair Jerome Powell? I mean, is this incrementally negative, you believe? Because this was pretty much the dot plot that there are 2 more rate hikes as well. And in fact, risks seem to be on the upside rather than downside.
So Nisha, the Fed policy was not hawkish, it was extremely hawkish. But markets, they've decided to ignore that. But markets are ignoring that selectively. If you frankly take out all the hullabaloo which is happening in the US AI sector, it is not that US market are in a very fine fettle. S&P, the key components of S&P, they are not doing exceedingly well. It's not that your Caterpillars and the Disneys of the world are they are doing well. Walmart's not done exceedingly well in this market rally. So the market action in US is restricted only to few stocks. Now, what would be the importance of this interest rate hike? And I think I'm just going to, maybe I'm preempting this, but I get a sense that the best part of the summer rally, if it is getting over, I'll stick my neck out and say this, is getting over. It's getting over in consumer tech stocks, and it is getting over in fintech stocks. So let's look at Paytm, Zomato, Policy Bazaar. I think the best part of the summer rally that is getting over. Let's look at the chart. Let's look at just the YTD graph of any of the stocks. That's yesterday's price action. Let's look at it. From the lows, Anisha, Paytm, which was sub 400, almost 500, is at 900. From the low, Zomato, which was sub 50 rupees, is now almost 75 rupees, touched 80 for a brief while. PB Fintech from 300, sub 400, is now at 600. I understand that they are talking profits. I understand that they were committed to, walk on the path of profitability. But even if you assume that they are walking on the path of profitability and put all the maths together, I think those stocks are looking slightly stretched. B, if interest rates are likely to hike, there is no way some of the growth stocks will do well. So I may be preempting it slightly early, but I think if you want to avoid one space, and if you have a time frame of 3 to 6 months, my sense is that best part of the rally, or the best part of the comeback rally for this year, at least in some of the consumer tech and consumer tech and fintech stocks may be behind us. Logic being, valuations are stretched. B, interest rate globally have not bottomed out, and we've seen that when interest rates they went higher in 2021 and 2022, what happened to some of these stocks? There is no way growth stocks will go higher now if interest rates are moving higher. That's my sense.
IT once again though is back in focus. You've got the Wipro buyback opening today. You've got Accenture, which is slated to come out with its numbers, and this sizable $1 billion deal by TCS.
Actually, the temptation to buy IT, I think, is there, and the reason why the temptation to buy IT is there is because the gap between where the markets are and where IT is, I think, is very large. And when the small cap index is nearing an all-time high, when the Nifty is at an all-time high, with the exception of 4-5 heavyweights, pretty much the entire market, good quality names at an all-time high, you say, okay, what is left? And what has not participated, I think, is IT. But should you really be buying IT? Let's understand the scenario. I would say that just because consumer stocks globally, just because you've got a rally in AI stocks and Nasdaq and Microsoft and Nvidia, should you buy TCS, Infosys, Wipro? No, sir. That's a completely different. That's a completely different kettle of fish, if I may use that word. These stocks will do well only when the business environment improves. What is the business Kahoot for some of these companies? It is banking, it is finance, manufacturing sector, and retail. I don't think those sectors in US are in bull run. I don't think those sectors in America, in Europe are in bull run. So I think IT is going to be a play only when you see real recovery coming back in the sector. The valuations are not that attractive that you want to be in contra buyer. So way I see IT moving is that you will see actually some engineering based IT companies will start doing well. So you got Tata Elxsi, we'll talk about names some other time, but the theme, mid-cap IT, and within that, manufacturing stroke design capability IT companies have a scope to go higher.